Okay, question 4. Terrific Tigers Proprietary Limited purchased the premiership making machine on the 1st of January 2017. The costs associated with the purchase of the machine are listed below. Terrific Tigers Proprietary Limited depreciate the machine using the diminishing value method at a rate of 40%. The company believes the machine has a useful life of 4 years and have a residual value of $25,000 at the end of its useful life. The first question is calculate the acquisition cost of the asset. So let's have a look. Now, so first one, we're calculating the so some of these costs here will be included in the capital cost and some of them will be excluded. What we're looking to include are the one-off costs that get the machine ready for use. So ongoing costs we're not interested in putting in, they're just an ongoing expense, so that's what we need to do. And the first one we'll put in is the machine purchase. So the machine, which is $200,000. Now should we include the freight cost to Punt Road? Yeah. Yep, okay. For $1,000. Should we include the installation costs? Yeah. Yep. And installation is $6,000.
No, yes.
What about the 3-year prepaid maintenance agreement? No, because it's 3 years, it's a maintenance agreement. Prepaid insurance for 1 year?
Yeah.
No, because insurance is an ongoing thing. What about staff training to operate the machine?
Yes.
No? It's ongoing, yep, that's right. We keep continuing to train the staff to use the machine. We want lots of premierships. OH&F safety signage for the machine?
Yeah.
Yep, so we'll include that. Signage comes in at $200. And the cost of painting the machine in club colours? Yep, okay. So paint. Necessary evil. Well, when we sell it, we can paint it in another colour. So we've got 200,000 plus 1,000 plus 6,000 plus 200 plus 750. 27950. Alright. Okay, so that's one done.
Oh, that's easy.
Yeah, it's easy. Calculate the depreciation at the end of each financial year. Okay, so let's have a look. What's the method of depreciation? The diminishing value method. So if I go and get my formula sheet out again, I can see my diminishing balance method is the carrying amount times the depreciation rate. So my carrying amount, well, my carrying amount for my first year will be that. My depreciation rate is 40%. Okay, so first year, or 2000, and when we started this, so we're doing it on the 1st of January 2017, and it says here, consider the financial year ends on the 31st of December. So that's 1 year, so we purchased it, so we've got 2017, 2018. Do we sell the machine at all? Let's see, the company decides to sell the machine, here we go, on the 30th of June 2019. So we've got 2019, which is 6 months. Okay, so, alright. So let's work out how we do this. Firstly, is my carrying amount is 207,000 times 40%. Is anyone fast on the calculator?
Why did you put 6 months in 2019?
Because we're selling it on the 30th of June. Okay. So what's the first amount? So it's 83,180. Year 2, I've got 207,950 minus 83,180 times 40%. What have we got? Minus 207,950 equals times 0.4 equals 49,908. And then we've got 6 months. So let's have a look here. We've got, okay, so 207,950 minus 83,180 minus 49,908 equals 74,000. So we've got 74,862 times 40% divided by 2, and that'll give me times 0.4 equals divided by 2 gives me 14,972. I'm just going to keep it in whole dollars. So if I add up all my depreciations, I get 49,908 plus 83,180 gives me 148,060. So that's number 2 ticked off. Alright, so the company decided to sell the machine and replace it with a newer version of the Premiership making machine. The company received proceeds of $85,000 from the Carlton Blues for the sale of the machine. Prepared a journal entry to record the sale and the gain or loss. So I've got my debits here and I've got my credits there. So the first thing I'm going to do is record the cash amount that I received from the Carlton Blues. So cash is 85,000, and then I'm going to dispose of the acquisition cost out of my accounts. So that'll be machine, which will be a credit because it's normally a debit, but when we're getting rid of it, we credit it out of our accounts. I'm now going to remove the depreciation from the accounts, so my accumulated depreciation.
If we put accrued by mistake, do we lose a mark?
No.
You have to give you mark for taking away.
I know, but I did that mistake on study.
Alright, so I got 148,000. Now the easy way to work out if I've made a gain or a loss is I just balance my journal entry. So my journal entry should have the same amount of debits and credits. So I've got 85,000 plus 148,060, whoops, 60, gives me 233,000, so this side's got to come to 233. Now if it's a credit, it's a gain, if it's a debit, it's a loss. So this time we've made a gain on sale. And it's for 207,950. It's for 25,110. And that's my question 3 done.